Hello viewers, you are welcome to my channel again. Sunday here, and my channel's name is Against FX. Today, every Sunday, we do our technical analysis. That is the weekly forecast for us to know the opportunity that is, lying ahead as far as trading is concerned. If you are new to my channel, do well to subscribe. You know why? Because once a video is released, and don't just subscribe, there's a bell button that you need to click so that that bell button will be activated. Anytime a new video is uploaded, you'll be the first to be notified. So it's very, very good if you subscribe, then you activate that bell sign. It's just a click and the bell sign is activated. Without wasting time, I would like to apologize for last week. I was not able to uh, make videos to do technical analysis for last week because I was health-wise I was a little down, so I couldn't do that. So I apologize for that. So today, let's dive straight to the chart. And before we do that, for the fundamentals, please do well to always visit forexfactory.com. Then you click on calendar. You see the news, fundamental news that is ahead. Like here, beginning from Tuesdays, you see news all the way. But on Monday, there is no news. So it's just a free day. You trade and without any fear and all that. But beginning from on Tuesday, there are news. Anytime the news time is closed, if you are not too sure of your analysis, please, you need to, when the news time is closed, you need to close your trade. But if you know that you know what you are doing, all right, the news can even facilitate your your trade to TP. All right. So the news will align with the technical analysis. That is the point I'm trying to make. So that is all. That is if you know what you are really doing. Yes. So that being said, do well to also visit our website. We have so many materials there, and reach out to us if you need anything that you want us to help you with. So that being said, let's dive straight to the chart. We are starting with gold USD breakdown. Let's do the breakdown of gold USD. Let's see how far we can go today. And because market will open in few hours from now. All right. As we all know, Forex opens Sunday night from 11 p.m. It opens until 11 p.m. on Friday. Forex runs 5 days, 24 hours, 5 days a week. And we have 3 sessions. We have the Asia session, we have the London, and the New York session. So that being said, let us dive into the chart and do justice to what is going on. As you can see, we've been bullish. This is clear, an uptrend. All right. So, and this is what a weekly chart. So now from the weekly chart, we just know that okay, this is here. This is the last break of structure here. All right. From this point, you can see this is a support level where we have last break of structure here. All right, we have last break of structure here, BOS. Anyway, you see BOS, you know that is a break of structure. So I'm just going to make it very simple for us to understand. So at this point, we know where we are going, all right? The last break of structure, then this is where we have our last support. So we should focus on this level because anything beyond this place is too far for us. As a day trader, you are supposed to get into a trade and close your trade on a daily basis, except if there is need for you to hold your trade for maybe for the next day. So we scale down to the daily. Now we are doing top-down analysis, guys. Top-down analysis, top-down analysis. All right, that is what we are doing, top-down analysis. So you can see this is a weekly level, the last break of structure of the weekly level. Now, if let's remove this, then on the daily, you can see the structure here. This is what the last break of structure. We have the support level here. We have support level here. Then let's put the break of structure here. All right. It might look small, but guys, this is a break of structure here. The break of structure that you know on a textbook is not the same thing, rather is not perfect when it comes to the real life market. All right. This is a break of structure. Why? Because there was a pullback before it now push, rise and broke this structure. So this is a break of structure. All right. Because the ones you will see on the textbook will say push to the upside, pull back, break of structure is very neat. So on a live chart is not that neat, but the ability to recognize that there's a break of structure there or any level, that is what makes you a good trader. All right, now we have identified this on a daily, and there's a break of structure here. All right, this is the last break of structure, and we can see all those big candles here. And price is still pushing back to come and interact with this. So we are having something here that we need to note, because it's something very important. Because this is D1 order block. So guys, you just stay tuned. I'm just going to teach you guys my strategy, and from today, you will know how to trade order block. It's as simple as that. You just go, you just look out for the last break of structure. What caused the break of structure? Like now, the trend is a bullish trend. So we are looking for the last candle before the push to the upside. All right, before the push to the upside that caused the break of structure. All right, this is a candle. The candle might be bullish, it might be bearish. So this candle here, this small candle here, is what caused this push to the upside. So that is the other block. All right, we just need to mark it. Then what we need to do is to keep scaling down. Keep scaling down. Let's go to 4 hours and see. Now, if you look at it, you will see where the other block is. It's still pretty far. It's still pretty far, all right? It's pretty far. We can even reduce it up to this point because you can see. So as you can see, it's far. It's very, very far. So we need now to see if we can get another order block. Yes, there's another order block here that we need to focus on. There's another order block here that we need to focus on. This is 4H order block. H4OB. This is a H4OB. Why do we say this is another block? It's another block because after this change of character, this was the last break of structure to the downside, BOS. It was the last break of structure to the BOS. Price got to this point, tapping here, rejected, then we now see, a push to the upside created a resistance. Now we now see what we call market shift here. Market shifting in the sense that it's been bullish, it's been bearish, now it has now turned. So you see, after the creation of this resistance, price pulled back to this level, but it did not violate this leg. So when you look at it very well, after this bearish candle here, you see this big candle. There was a massive push. All right, there was a massive push from here, and this shows that institutions, big boys, they were involved in the market. All right, so at this point, we are going to use this other block. All right, because this down one is valid, but is very far. It's valid, but it's very far. All right. Remember, this is what the daily order block is very far. It's still valid, but it's very far. So we need to work with this very one. So at this point, if you are the type that takes trade on 4H, all you need to do is bring out your buy tool. All right, take a position here. We are going to be targeting this level, the high, then a little below this level. All right, a little below this level. So the idea is the price has moved to this point, then it's coming back to interact with this other block before it will now start pushing to the upside. That is just the strategy. Now we have, for those of you who don't know this type of strategy, this is what we call SMC strategy, smart money concept strategy. What does that mean? We simply look out for the direction of trend. After we have ascertained the direction of trend, then we need to now look out for the last break of structure to the upside. We mark that place as the last break of structure. Then we will now look for the other block that caused the break of structure to the upside. Now, in this case, this is the other block that caused this push to the upside, right? And the things you have to look out for that will make that our setup an A+ setup is that this point here, as you can see, we have what we call sell liquidity. Sell liquidity. All right, we have what we call sell liquidity here. So the sell liquidity simply means that price will come back, push to the downside, clear out all the sellers from here, use them as liquidity to facilitate this move to this downside. Now we have FVG present. The FVG simply means fair value gap. This fair value gap is very, very important. FVG, fair value gap. All right. When price push away from this level, it created a gap. So it's very, very important. This gap is very, very important for us to have an A plus setup. So as far as I'm concerned, this is a clean setup, a very clean setup. Now, if you don't take trade on 4 hours, all you need to do scale down. All right, you scale down, then you do some adjustment. So you can see the other block. This is the other block here. All right, go to 2 hours, go to 1 hour. All right, you go to 1 hour. You see, there may be 30 minutes. If you're the type that takes trade on 30 minutes, you go to 30 minutes, and you see, you go to 30 minutes, or if you're the type that takes trade on 15 minutes, you scale down to 15 minutes, all right? You scale down to 15 minutes. So all you need to just do is the adjustment. You just do adjustment, little adjustment. Here, the FVG is still present. This is where the market shift happens, and we have our sell liquidity here present. Why do we say sell liquidity? We are saying sell liquidity because price will have to clear this level to come and interact with this point. But as far as I am concerned, I take my trades on 4 hours. So if you look at it very well, you discover that this setup is very, very clean and very, very pure on 4 hours. So all you need to do is just be patient for price to come interact with this, then you will now see a very strong move to the top. So now that we have identified this point, we just need to what? Set our pending order. So this is our pending order. You just set your pending order here like this. So the coordinate for this is, the entry is 3298.13. 3298.13. Okay, let me just put this thing here. The coordinate entry, that is EP. We have 3278.25. All right. Then SL, yeah, our SL will be here. a little down. Let's give it a little breathing space because of the volatility. So the SL will be 3276. 3276.12. 3276.12. Then our TP will be targeting, even though we are supposed to target this level, but let's be conservative. Let's not be greedy. All right, let's not be greedy. So all we need to do is we are targeting this level. All right, we are targeting this level. 3408.12. 3408.12. All right, 3408.12. I think it's better white. Okay. So you can see this is the coordinates. The TP is, the entry is 3278.25. The XL is 3276.12. Then the TP is 3408.12. All right? It's as simple as this. The strategy is we look out for FVG, all right? Then we look out for liquidity, all right? Then the other block. This is A plus setup, guys. But as we know, we don't control the market. So we are hoping as soon as price get to this level, it will tap and reverse. Then we'll now start to pack the money that is here waiting for us. That is trading. You don't need to kill yourself. As simple as this. This is how it is. But we have another one pending, but this one is still far. But it's valid. It's a very valid setup, but let's just leave this one pending for now because it's far. All right. So that is that. As far as I'm concerned, just all you need to do, put your pending order, buy limit order. Put your buy limit order. All right, put your buy limit order. All right, just put your buy limit order straight away. These are the coordinates. All right, so let's go to Euro USD and see what we have. Euro USD. From the weekly perspective, we can see that it's been bearish, but they pull back from this bearish push. All right, they pull back. All right, so let's just see what happens on the daily. From the daily leg, we can see that this point is our last break of structure. Last break of structure here. break of structure. Guys, you follow so that you can always do your analysis yourself. All right, as even though you are new to the field, as somebody who is just new to Forex, once you follow what I am doing repeatedly, watching my videos, you will be able to perform your technical analysis yourself and know where to wait for uh, price. So you wait for price to come to you. You don't run after price. And Forex requires patience. You need to be patient for you to be profitable. Wait for price to come to you. And what do you guys think about SMC strategy? Please, I need you guys to, if you know what SMC strategy is all about, please drop it at the comment section. Drop it at the comment section. Just tell me what you know about SMC strategy. All right? Because like trading, you need to pick one strategy and be repeating it over and over and over again. So that being said, this we have identified our last break of structure and the support level. So let's scale down to our 4 hours. Then in 4 hours, we can see something. I don't know if you guys can see it. If you can see it already, let me know. Drop it at the comment section and tell me, yes, you have seen something based on the first analysis we did on gold USD. Now that we have scaled to 4 hours, tell me what you have seen right now. Drop it at the comment section so for me to know that you are really following up. Okay. So at this point, we have another block here. We have another block here, right? We have another block here. Like I told you guys, we need, before we can have an A+ setup, we need a massive candle like this. All right? A massive candle like this with fair value gap. And apart from that, we need our sell liquidity. We need our sell liquidity here. All right? We need our sell liquidity here. We need our sell liquidity. These levels, sell liquidity, we need them. Okay, this level, this is where price will sweep to come and interact with this other block. So this level is the other block. This is the other block. All right. Sorry, this is a fair value gap. Sorry, I beg your pardon. This is the fair value gap. This FVG, the fair value gap here. All right, this is a fair value gap. Here we have the 4 hours H4 OB. OB stands for order block. All right. Then we have our high here. Then we have our low. All right. So at this point, everything we need, guys, you can see we are doing analysis now on Euro USD. And we have already identified a setup, and our setup is this very one here. All right, so this setup is also an A plus setup. All right, is an A plus setup. Why? Because every of the things we need, they are available. Every of our requirements. Number one, the fair value gap is there, the other block is there, and our liquidity zone is already marked. So every of the things we need to place a sell, a buy limit order here is intact. All right, like I said, if you are the type that don't take trade on 4 hours, please, with this, we have marked our levels. All you need to do is you scale down. Scale down. You can see if you are trading on, if you take trade on 3 hours, you can still shrink this very thing, this thing here. Then if it's 2 hours like that, but the most important thing is the other block. All right, the other block you mark from the high to the low of that candle. Please don't miss that. It's very important. So everything is intact up to 15 minutes level. You can see it's still intact. So I personally, I take my trade on 4 hours. I take my trade on 4 hours. All right, I take my trade on 4 hours or 1 hour. 4 hours or 1 hour. All right, I can take my trade on 4 hours or 1 hour. So even if you take your own trade on 15 minutes, the best thing to do is you use the higher time frame level to scale down, just like what we have done. From the 4-hour order block, we highlighted it, then we now started scaling down. All right, all you need to do is just the little adjustment as you are scaling down. So make sure you don't miss that point. All right, so that is that, guys. And as far as I'm concerned, let's drop the coordinates so that we move to another PS. So we are going to give a little space because of volatility. It's very important. In trading, give some rooms. All right, you don't even need to be stingy with that. Give some rooms, guys. You need to give some rooms, guys. Otherwise, price might just come, stop you out, then you will now see price going to your direction, and which is very, very painful, which is very, very painful. So you give some rooms, all right? Give some rooms, all right? It's very important. So by the time it taps and it start going to your direction, then you can now start managing your trade, all right? Managing your trade. Like personally, what I do, once I see price going in my favor, I'll just carry my stop loss and put it into profit, I'll move my stop loss into profit. So at that point, I'm not risking anything. So just move your stop loss put it where your entry level is. Put it there, or a little above it. That means you are not risking anything anymore. But for a start, you need the trade to move to your favor first before you do that. Otherwise, if price should reverse, come back a little before it start going, it might stop you out. So let it move to your favor, then you now move your stop loss into profit. Then you can now start, just remove the risk part of it. Then as it progresses, then you now start managing your trade. It will get to a level you take partials. All right, take partials. All right, you take partials. So at this point, let us drop the coordinates. Entry. The entry point is this point here. Entry point this, then stop loss here. Then take profit here. Okay, so our entry point is 1.14388. 1.14388. That is our entry point. Then our Excel is 1.13826. 1.13826. 1.13826. Then our take profit, our TP, our TP will be 1.17786. 1.17786. 1.17786. All right, so guys, this is the coordinate. Coordinates. So I hope it's very clear. All you need to do is what? Set your buy limit order. Buy limit order. Set your buy limit order. You set your buy limit order. It means that once price push to this level, come down, tap us in, then price will now start going to the upside. So that is how we trade, guys. So that is all for Euro USD. Then what is the next thing now? GBP JPY. Let's see what is there. GBP JPY. GBP JPY. Let's see what we have right now. The weekly. We can see after this push to this side, we can see some push to the downside. Okay. Let's go to the daily and see if we can see any opportunity. Let's take a look at this level first and see whether there's something. Okay, let's see. This is the last break of structure here. Break of structure to the upside. BOS. Break of structure to the upside. Then the break of structure to the outside. Scale down, scale down, scale down, and see whether there's something. 2 hours, even 2 hours, there's nothing. We cannot find anything tangible, nothing yet. Nothing yet. Even 30 minutes, nothing yet. But this one has already been mitigated and you can see it's already going. All right, the only thing we need to put our eyes is this one. Because this one is already mitigated. And is dishing out a buy already. This one already mitigated and is dishing out a buy. All right, on 30 minutes, let's go to, okay, it's even better refined on 15 minutes. Better refined on 15 minutes, but you can see that it came back, tapped in here. This is a 15 minutes order block. 15 minutes order block from 5M OB. 15 minutes order block. You can see that price actually came back, tapped in here, and it started dishing out a bar. All right. So as far as I'm concerned, this one has been mitigated. This one already mitigated. So that means for GJ, there is no clean setup for GJ. But if you scale down to 5 minutes, what will you get? If you scale down to 5 minutes, you see a setup ball. Should we take this as a setup? Because here, this is the last break of structure here on 5 minutes. On the 5 minute, this is the last break of structure because before price created a high and it's coming down to interact with this level because this is what caused the break of structure to the upside. All right. Well, I don't like forcing trade because below 15 minutes, although below 15 minutes, guys, it's true that when price gets here, there will be a reaction, but it's not something that I can vouch for, all right? Um, Anything below 15 minutes, other block, just for me, forget it. It can work for other persons, but for me, I will not even advise it, all right? I will not advise it, all right? So I will take this GJ as there is no setup. Please, let's wait for Monday, like tonight, Sunday night, Monday, before close of uh before evening on Monday, let's see what price will do. All right, let's see what price will do. It's very possible that this push will come here, but it's not an A plus setup. Why? Because this other block here, well, this is another block, but if you take this, all right, and look at this candle, this candle here, you notice that it has already been mitigated, meaning that this one here, there is nothing left. This other block has already been mitigated because from this top here, the high of this candle and the low of this other candle, there's already an interaction. There's no space there. So it has been mitigated as far as I'm concerned. It has been mitigated. So the only one that is valid now is this. But this one, this is the only one that is valid right here. This is the POI that is valid, the other block. Because this push, there was a pullback. Here, this is what now caused the break of structure to the upside. All right, this is what now caused the break of structure to the upside. So if price, as price is coming back to interact with this level before it finally push to the upside. So if you look at it very well, you discover that, okay, there is still sell liquidity here. There's a sell liquidity here. But what is not really present or what is not really visible here is our FVG. Is our FVG because this other block here, the high of this other block and the low of the next candle is closed. Then if you look at this POI, the low of this and the high of this is already closed. So if you look at this low of this and the low of this and the low of this pullback is already closed. So guys, let's forget it. There is no setup. For now, no setup. No setup on GBP JPY for now. So guys, don't force setup. Don't force setup. I beg you, don't force setup. All right? So that you will not lose your capital. All right? The ability to have an edge in the market is when you are able to protect your capital. All right? If the only pair that you trade is GJ, that is GBP JPY, for now, you don't have setup. So you can be doing another thing. Just be reading to improve yourself as you trade and watch videos so that you can even use that to improve yourself. All right. And tell me your challenge, or rather your challenges so far as a forex trader. Please drop it at the comment section. Let's discuss it. So we will move, well, as far as GJ is concerned, there is no setup. All right, so which one should we do now? BTC. Okay, let's analyze BTC. The weekly. Let's analyze BTC. From the weekly, you can see we are pushing to the upside. So let's go straight to daily. From the daily, we see our last break of structure. This is the low here. So let's check this level and see what we can find. Let's see if we have a setup. Let's see if we have a setup on BTCUSD. Let's see. 4 hours, there's nothing. 3 hours, there's nothing. 3 hours, there's no setup. 2 hours, nothing. 1 hour, there's no setup. The only thing I can see here is this, but I like sticking to the extreme. 30 minutes was there. There's another block. Is it 30 minutes? 1 hour. 1 hour, other block, 2 hours. Let's see now. I think it's better. It's better 1 hour or 30 minutes. 30 minutes seems to be better. 15 minutes, let's see. 30 minutes seems to be better, or 1 hour. Since 1 hour is higher, so we'll take 1 hour. Let's take corner because here, this was the last break of structure here. Last break of structure. Last break of structure before price turned. And what we can see here is what? Market shift. Market shift from here. Shifting from bullish to bearish. All right. And we have a break of structure here. So we are expecting now that price should pull back to this level because of this fair value gap here, FVG. There's an FVG here. Then this one we have that is 1H or H1 OB. This one is a little risky because it's not at the edge trade. Anyways, so our entry will be here. Our entry on 1 hour. Then our stop loss will be here. Then our take profit will be at this level, reversal level. Will be at this reversal level. So let's drop the coordinate. This one will be coordinates. BTC USD. Sell limit order. This one is a sell limit order, not buy limit. This is a sell limit order. That's what you are going to use. Sell limit order. So we have our entry, our EP, that is our entry. Our entry is 120.75405. 120.75405. Then Excel, our Excel will be 121.441, 121.441.52. Then our TP will be 116.116.838.85. 116.838.85. This is the coordinate for BTC. All right, and we are placing a sell limit order. Sell limit order. Guys, sell limit order. Because now Okay, there's something we've not put. We have our buy liquidity here. Buy liquidity. We have our buy liquidity. The idea is for price, as price move like this, one price to come up like this, tap us in, then come down and fill our TP. So that is the idea. There is a liquidity where price will come sweep to facilitate the movement to this place. And we have fair value gap where price left a gap that it needs to come and close up, and we have our order block. So that being said, we are placing sell limit order, not buy limit, sell limit order. All right, because we are going short and we need to place our sell limit order. All right, so which other one should we do now, or we should close? Man, I'm tired. Anyways, if you have any particular pair that you want us to help you analyze, please drop it at the comment section so we can do it and send it to you. All right, you can just do it and send it. You can drop it at the comment section, or you send us a mail. Our Telegram is there and everything. So drop a comment and tell us about what you feel. Tell us what you feel about this strategy. Isn't that simple, straightforward? All right. All you need to look out for is the last break of your structure. Look for the direction of the trend. That is very, very important. Then look for the last break of structure. From the last break of structure, you single out that candle that caused that break of structure. All right? The candle that caused that break of structure. And for it to be A plus setup, that means you have to look out for fair value gap and buy or sell liquidity where price will sweep to facilitate the movement for our order to be filled. It's as simple as that. So you just set your trap, leave the rest for market to do its thing. That is just it, guys. So thank you so very much. Thank you so very much. Subscribe to my channel so that you always get this kind of value that we bring to you. All right, subscribe and activate the bell sign so that once we drop any video, any content, you'll be the first to be notified. So at this point, thank you so much, and let's hope that this week favors every one of us. That being said, God bless you. Have a lovely week, guys.